What's up, guys? Welcome back to the channel. So today I wanted to make what I hope can be a quick video talking a lot about timing, taking advantage of timing, and something that I think is highly underrated, but a lot of people don't really know about. And we'll get into that in just a second. But if you haven't already, or if you're new to the channel, please go ahead and hit that subscribe button, like, follow, that notification, all that good stuff. So when I put out new content, you're alerted and you can keep learning with me. So as you guys know, this channel is a lot about infinite banking, the concept of infinite banking. Becoming Your Own Banker by R. Nelson Nash. If you haven't read the book, I highly suggest getting yourself a copy of it and reading through it. Make it a New Year's resolution, something like that, because there's so much valuable information in that book on how you can start recapturing so much of the money that's leaving your system and going out to third parties that you'll never see or make money off of again. You guys have no idea. Once you really understand, once you get a peek behind the curtain, and see what's going on and see what banks are doing and how much banks are making and how you could be doing something very similar with your own money, then it's hard to unsee it. So in that point, I want to focus on timing. Now, a lot of people think, to themselves after they see my content, see some other people's content out in the space, Chris Nagel, number one money mentor, Hannah Kessler, the Do brothers, all of these people that are talking about this amazing concept, but you hear them talking about putting in 1,000, 2,000, $10,000 a month into these type of products, into these participating whole life insurance policies. And what some people don't realize right off the bat, because they see these numbers and they're like, oh my God, that's too much. I can't do that. I'm not in a position to do that financially. But what they don't understand is we're not just putting this money away to be gone somewhere else. It's not like your qualified plan. It's not like we put money in and then we can't access it to do other things with. Once you understand how the system works, you realize, hey, this is really just a glorified savings account. It's banking a system. So I'm able to still utilize this money I put into it. But maybe you're not there yet. Maybe you're not the person who sees the video and they're like, hey, I hear them say at minimum, I should be putting in 10 times my age on a monthly basis. And that's just minimum. So if I'm 35 years old, I should be putting in $350 a month. But maybe I'm not there yet. Maybe I love the concept of infinite banking. Maybe I want to recapture all the money that's leaving my system on a monthly basis, going out to third parties that I'll never see again, never be able to spend again. It'll never make me money again. But maybe I'm just not financially there yet. Well, how do I take advantage of the now? I'm super healthy. I know we're talking about insurance here. I understand this is whole life insurance and the product is a participating whole life insurance policy. And that means that the cost of insurance and some of these things are going to be based off of my age, and whether I can qualify or not is going to be based off my health and all of these things. So I get that. And I'm not getting any younger. I mean, if you're getting younger, let me know, because I want to get in on that secret. I got some money for you. You can let me know how that works. But most of the people I know aren't getting younger. And they also aren't getting healthier. Now, I can't say that for everybody. Some people are really starting to take their fitness and everything very seriously, which is really good. But I digress. Sorry, I started to go off on tangents. But I think one of the important things that people realize is, hey, I'm probably not going to get better as time goes on. Again, I believe you. You're probably a fine wine. And, things are only going to get better and better for you in your life. But in general, health isn't one of those things. So we want to take advantage of where we're at right now. And a very well-known way to do that I don't think a lot of people know, is a product called convertible term. Now, if you listen to my content, you've heard me talk about term coverage before, and you've heard my strong feelings about term. I do not like term coverage. I think it is a waste of money. Now, just to be clear, we're talking about two different things here. You have regular, just generic term life insurance, and then you have convertible term. So I know everybody knows what term is, but if you just crawled out from under a rock and you don't know anything about life insurance, term is rental insurance, meaning I'm going to pay a company this amount of money on a monthly or yearly basis, depends how you have it set up, and they're going to provide me with this level amount of coverage that's going to protect my life for the next however many years I've chosen, 10, 20, 30, whatever it may be. Those are the most common. Now, one of the reasons I don't like basic generic term coverage is because I pay, I pay, I pay. I don't die by the time my rental coverage period term is up. And where's the money? It's gone. I gave to this company. It was kind of a trade-off thing. And so there's better ways to make sure that you're protected while also kind of taking advantage of the idea behind the cheap coverage and, wanting to do some other things with your money later on. And I think that product that fits right in between is convertible term. So normally a term policy, like I said, you pay, the term covers you, the term ends, you haven't died because 1 to 2% of people actually pass away. Less than 2% of people pass away during their term period. So you basically just rented a house from somebody, you built no equity, you had no access to cash, anything like that. And then you left the house because your term to live there was up and the person made out like a bandit and you have nothing to show for it. Well, convertible term gives you a little bit more flexibility. And I'm going to discuss how exactly that looks and how you can take advantage of that today if you're not quite ready for infinite banking. But a huge secret is that this can lock in your insurability today. So 5 years, 10 years, 15 years, whatever it may be down the road, when you're ready to say, you know what, Sean, I'm ready to get involved in infinite banking. I'm ready to start my own participating whole life insurance policy. I'm ready to start taking back control of the banking function in my life. Well, 5 years, 10 years, 15 years down the road, we don't know what's going to happen. We don't know what your health situation is going to look like. But with convertible term, luckily for you, that's not going to matter. So let me explain. Convertible term is basically the same exact product. We're talking about term coverage, rental coverage, 10, 20, 30 years period. But what we're going to do is you're going to go through a fully underwritten process, meaning somebody's going to come to your house or you're going to go to a facility and they're going to do blood and urine and probably some height and weight, really basic stuff. Takes all about 15, 20 minutes at most. After that, they're going to come back to you and they're going to say, cool, we're going to send this information off to the underwriters at the insurance company. Those underwriters are going to come back to us and say, hey, Sean, your client, Mr. YouTube viewer, has been approved at a specific rating class. Awesome. That process is done. You've been approved. They've given you a rating class, whatever that is. The cool thing about convertible term is that is locked in. You're good. You've done the underwriting. You don't have to do underwriting ever again, unless we're trying to start a whole new policy for more coverage. So why this is so important is because let's say you are super healthy right now. But like we mentioned before, you don't know what's going to happen 3, 5, 7, 10 years from now. Anything could happen. Your health could drastically change. But maybe you want to do infinite banking here down the road. Maybe you're not in the financial position right now to do so. And there is, let's be honest, quite a big cost difference to the normal person between term coverage, convertible term coverage, the cost of it, and being involved in participating whole life. So what do? Well, we get you set up with a convertible term. You've seen the videos, you've seen all the information. You're like, I love the concept of infinite banking. I think this is a great idea, but I've only got, let's call it $50 a month right now. Because normally what we would do is we'd tell you to sit down, lay out your budget. What's coming in? What's going out? What do you have extra that you're not using on a monthly basis that you're saving? And then that's what we would use towards your infinite banking policy. But again, maybe you're not somebody that has $1,000, $500, whatever it may be. Maybe you're pinching pennies together right now. You're trying to get yourself into that position where you can start saving more. Maybe you're deciding, maybe I don't need Starbucks 2 times a day. Maybe I don't need Netflix, Hulu, Disney Plus, HBO Max, all of these different things. Maybe I could cut a few things back because it's going to benefit me in the long run and I can start my infinite banking process. But as of right now, Sean, I've got $50 a month. How do I take advantage of my health situation in this moment and make sure I'm locking in where I'm at, my healthiest form, but also make sure I can do infinite banking down the road? Well, Convertible term is going to be your best friend. So I'm going to show you guys an example, just a general example of what a convertible term policy looks like. I'll walk you through kind of my suggestion on how this could play out and how it could be advantageous for you financially and, coverage wise now and then later in life. So share my screen with you here. Perfect. All right. So this is a One America term policy. And this policy is for Mr. YouTube viewer. That's you. This gentleman is 35 years old. And after we have our discussion, he says, hey, I have, let's call it $50 of cash available at the end of every month that I could put aside towards this because I understand what we're doing here. So we go and we work him up just a basic term illustration for right around $50. In this case, I'd like the round numbers of the death benefit. So I came back to him. I said, hey, Mr. YouTube viewer, for $46.55 a month, we can get you $1 million in death benefit to protect your family. Now, luckily for him, Mr. YouTube viewer, he is in the underwriting class of elite non-tobacco, the best of the best that One America offers. And all that means is his cost of insurance is as small as it can be for his age. He got the best rating out there. There's quite a few other ratings that are below that. And again, cost of insurance doesn't vary drastically if we're going a few ticks lower than that. Let's say you just get the standard rating. Well, you're not going to be saving $1,000 a year. At the end of the day, he's only paying $535. Well, quick note here, if you pay annually, you get a little bit of a discount. So really we're talking about $20 at the end of the day. I'm going to leave that up to you, however you want to pay it. But in this case, let's say that you're paying $46.55 a month. You've locked in this elite non-tobacco status rating. This is the most important part. I want you guys to pay attention here. Locking in your rating now is going to save you thousands of dollars later in life because we don't know what's going to happen. It could save you an unlimited amount of money because maybe at some point in time later when something happens to you 10 years down the road and you can't get coverage, well, now you can't even qualify. So what's so cool about convertible term is you lock in this underwriting class, and then it doesn't matter. If Mr. YouTube viewer wants to convert a portion of his death benefit, his coverage 2 years from now into a participating whole life insurance policy, you know what rating class he's going to get at 37 years old? Elite non-tobacco. So they're not going to say, Mr. YouTube viewer, let's sit down and let's go over your health information again. Let's do the blood, let's do the urine, because you already did it. You've locked in your guaranteed insurability. All they're going to do is get the basic info that they need from you to convert whatever amount you want to convert. So of course, you will pay what it cost a 37-year-old to convert a portion of their coverage into whole life insurance at that time. But let's say that your health status had diminished a little bit. And maybe if you did go through the underwriting process again at that point in time, maybe you would have just got standard. So your policy is not as efficient as it could have been if you were still elite. Well, luckily for you, you had locked in your insurability with your convertible term. And let's say at that time, you're like, hey, I got $500. I've been saving, I've been doing this stuff, and now I consistently have $500 extra a month that I'm ready to start my infinite banking, my participating whole life policy. I'm ready to take the first steps in that journey. Okay, great. So what we do is we figure out as a 37-year-old who's getting an elite rating, what $500 a month is going to do for you. And we knock off or we take out as small amount of a death benefit as possible, because that's the idea with participating whole life and practicing infinite banking. We want to get as little life insurance as possible so your money, that $500, can be working for you in the most effective way possible. So let's just say in this example that a 37-year-old male paying $500 a month for a properly structured, very important, properly structured participating whole life insurance policy, say that gets him $150,000 after we set everything up. Well, $150,000 is going to be deducted from his $1 million in coverage. He's going to be paying for that cost of insurance at the elite non-tobacco rating, and he didn't have to do any extra underwriting for that. So now he has an $850,000 term policy. He has $150,000 of participating whole life insurance, which he is now going to utilize for infinite banking. And that death benefit is going to keep growing and growing and growing year after year after year, even if he doesn't utilize it for infinite banking. Now, let's fast forward a little further. He was 37. Let's take him up to 45. He's 45 years old. It's been 10 years since he got the policy. He has a 20-year term policy. So he's got 10 more years on the term, and then it's going to end. Remember, he has $850,000 left in his term. And so if he doesn't do anything with that $850,000 over the next, let's call it 10 more years, being 45, so before he's 55, then it's done. Poof, goes away. Nothing left. He just has the $150,000 that he converted, which again, at that point in time, would be far larger because the death benefit increases. So let's say he gets to 45 years old and he has a catastrophic health issue. Let's say he got diagnosed with cancer. Luckily for him, it was a cancer that they were able to cure, but now he's uninsurable. And he thinks to himself, man, I've got this 150 that's been increasing year after year after year. I've been utilizing it for infinite banking. I've been doing all this stuff. It's fantastic. I love the concept. This is awesome. I have 850 here that's going to expire in 10 years if I don't do something with this. Luckily for me, I've made some smart money moves, as YouTube viewer is saying, over the years, over these past 8 years, from the time I was 37 until now that I'm 45. And I have the ability, cash-wise, to pay for what it would cost to convert that remaining $850,000 into permanent life insurance. So that's exactly what he does. Now, remember, if he had to go back through the process at 45 years old and get qualified for $850,000 in whole life insurance, he couldn't do it because he had cancer. He wouldn't qualify anyways. But because he had this convertible term in place, because he had the foresight to lock in his insurability now, not knowing what was going to happen later, he's going to get that elite non-tobacco rating at a 45-year-old age. And he realizes, I need to lock in as much of this coverage and convert it into permanent coverage as possible, because it sounds like I can probably never get coverage again. So he does just that. He sees the value in converting the rest of that $850,000 into permanent coverage, and he converts it. He now has 2 participating whole life policies, 2 policies that are going to increase in value, in death benefit for the rest of his life, as well as cash value increase, dividend increase, all the while, even if he's not utilizing them for infinite banking. But because YouTube viewer is a smart guy and he's read Becoming Your Own Banker by R. Nelson Nash, like we suggested he did, he knows exactly what to do. And he starts putting those policies to work. And that $1 million term that he started out with turns into much larger death benefits down the road with massive cash values that he's been sending out other places to make him more money while it's continuously working for him in his policies like it was never sent out in the first place. So he's winning on all fronts. He beat cancer. He's in a great spot, and he's converted all of his $1 million in term into permanent coverage at the rate, the cost of insurance of an elite non-tobacco user, even though he hadn't been that rating class since he was 35 years old. So there's so much value in this. And again, timing is everything. We don't know what's going to happen to us health-wise. We don't know what's going to happen to us in any way. But what convertible term allows us to do is basically freeze a moment in time where, again, for myself, I think I'm at the healthiest I've been in quite some time. So I want to take full advantage of that rating class that I'm at now, not knowing what I'll be at later. And some of you may be thinking, well, right now I'm healthy, but I'm on a trajectory to get even healthier. Well, my suggestion to you would be lock in your rating class now. And if you get healthier later, you can go through underwriting again and you can get a better rating class. Now, what won't happen is if you go through underwriting and you're actually in worse health, they're not going to lower your rating class. So it's kind of a win-win scenario. But what we don't want to happen is for you to get to a point where you want to partake in infinite banking, but something's happened health-wise and now you can't even qualify. Talk to anybody in the industry. I know a bunch of people right now that would love to be able to put policies on themselves, more policies on themselves, but because health-related things have happened over the years, they're no longer insurable, and now they have to put policies on others, which is still great, but you want to make sure that you are the insured body, especially if you're the breadwinner or whatever it may be. You want to make sure that your family is going to be taken care of from the policies that you put on yourself and the coverage that you have protecting your life. So again, timing is everything. We can't time the market. We can't time a lot of things, but what we can time is this. We can make sure that we can lock in our guaranteed insurability right now where we're at. I don't care if you're 25 or if you're 45. We can lock that in and make sure that, one, you're getting enough death benefit for your human life value. I think a lot of people actually don't realize that, like, hey, maybe this 35-year-old, he could only afford $50 right now. Maybe he actually would have needed $1.5 million to make sure that, his human life value based off of his income and all of those things were taken care of if something happened to him. We want to make sure that you can get as much of that coverage locked in, because we don't know if you're going to be able to get more later. We can always convert it, but if you get to a point later where you can no longer qualify for coverage, then we can only convert what we have. So the best idea would be, let's get as much as you can afford to get right now. And then as situations change, as time passes, you become more financially capable, we can start chunking off portions of that convertible term, turning it into participating whole life insurance policies, and you can start practicing infinite banking and recapture the money that's leaving your account, that's leaving your family, that's leaving your system on a monthly basis, going out to third-party lenders and them just eating up that interest, eating up all of those payments that you'll never see or make money off of again. So I know that was a lot of information. I always talk way too much, but I think there's so much value in understanding convertible term, how it's utilized, and how you should start implementing it right now to make sure that you're securing your future today. If you'd like to know more, if you've got questions, by all means, drop any comments below. I'll make sure to respond to you. Head on over to my website, legacylifeandretirement.com. Book yourself a free cash consultation call. Even if we're not talking about infinite banking, we could talk about infinite banking, because if you're getting a convertible term, you're like, hey, I like infinite banking. I want to do infinite banking. I may not be there right now. Maybe you have some questions about it. But if you also have questions about the convertible term portion, we can discuss that. Or maybe you're the person that's like, hey, I can do the infinite banking right now, but I realize when we put that policy in place, I'm not getting the death benefit that I need for my family, because we squeeze the death benefit down so we have the most liquidity with the cash value. And maybe you're smart and you're like, I think I want to add a convertible term to lock in my insurability now. So as I start adding more branches, more policies to my system of banks, I can just piece stuff off and I don't have to worry about going through the underwriting process again. We're already good to go. So if that's you, book yourself a free cash consultation. Let's have a conversation. Let's get all of your questions answered. Let's get you educated so you know exactly what you should be doing. And let's get you on the way to building a legacy for yourself that you can utilize and for your family when you pass. At the end of the day, the information, guys, is always free, but the knowledge is priceless. Again, if you haven't subscribed, be sure to do that. I put out new videos every week, help you guys get educated, help you take advantage of what is out there and available to you. I appreciate your time, and I'll catch you next week. Peace, y'all.